Hey everyone, welcome to a Optimum FX weekly analysis. Today I'll be covering our major currency pairs, gold and the Dow Jones. I'll be looking at what macroeconomic data is going to be released throughout our major economies, understanding how that can impact the markets. It's currently the 18th of July today, 2021. It's about 14 hours until market open, so until Asian session on Monday. But yeah, I want to quickly look at what macro data we have, quickly analyze the charts, and once we got our fundamental and technical biases, we can map out potential trade ideas. So firstly, I'm going to quickly go over what macro data we have been released this week. So it's currently, this is the third week of the month. Yeah, so we got one more week after this, and then so next week will be the final week of the month. Alright, so to start off, no data on Monday. So on Tuesday we do have housing building permits, which is going to be a bit of an indication of consumer confidence, pretty much indicating how many people are essentially going to be building homes, and housing starts throughout the US economy. We do have mortgage applications as usual on a weekly basis. Thursday we do have jobless claims, so we'll understand how many people are applying for unemployment benefits through the government, which will kind of give you an indication of the health of the economy. Obviously, a lower number is better because it's indicating that less people are unemployed and taking government benefits. On Friday we do have existing home sales change, Kansas Fed manufacturing activity, along with preliminary Pmi data. Okay. To end the day, we do have Baker Hughes US oil rig count. So moving on to Europe, we do have construction output, current account. So with your so with your current account, it's just essentially just telling you like the flow of transactions going in and out of the European economy, well, essentially out of the ECB. And then subsequently to that, towards the end of the week, we might see euro range a bit along with euro equities. We got the ECB interest rate decision. We're going to see plenty of volatility come the euro prior to this release. On Friday we do have consumer confidence, along with preliminary Pmi data. Okay. So moving on to UK, we do have HPI data coming out. Central Bank member Haskell speaking on Monday. Wednesday, public sector net borrowing. We do have on Friday, end of the week, consumer confidence, which is aligned with your retail sales. Okay, because consumer confidence is going to give you like a brief indication of what the retail sales are going to be. Because consumer confidence is essentially, us as people, as buyers, essentially feeding the economy. And if the economy is great, unemployment's low, means plenty of people have money. So what do people do when they have plenty of money? They go and spend. So what does that mean for retail sales? If a lot more people have money in their pockets, they got employment, they got stability, they're also going to splurge, because that's what people do. Okay, so what does that mean? That means consumer confidence is going to be up and retail sales is going to be up. Okay. Then we have preliminary PMI data across our major economies this week. Japan, we do have CPI data being released on Tuesday. Wednesday, we do have adjusted merchandise trade balance, along with Bank of Japan monetary policy meeting minutes from their meeting last Friday. We do have imports and exports data being released. We got a bank holiday on Thursday, and that's about it. When it comes to impactful data, on Wednesday we do have new housing price index. We got the employment insurance beneficiary change month on month, along with retail sales. So it's really a consumer confidence indicator for the Canadian economy. So in Australia had the RBA meeting on the first week of this month. Okay, they're finally having the minutes, finally discussing or pretty much forecasting how the Reserve Bank sees the economy in the coming months, in the coming years, and so forth. More than likely, they're going to follow the Fed script. Obviously the economy is booming. Obviously there's a bit of inflationary pressures, but once inflation comes down, and is consistent with 2% on a month-on-month basis, Unemployment is 4.5%. We get good GDP, so forth. Australian economy is booming, then they can start to taper their bond buying and increase interest rates in the next couple of years. We also know that New Zealand's planning to hike their interest rates by 2022, which is it's a bit extreme, but that's their forecast. Obviously, the New Zealand dollar is going to be very attractive, but this is me going off script. But moving on Friday, we do have, as usual, preliminary PMI data. So preliminary PMI data, so essentially it's just like a survey from like manufacturers, and talking about the inventory levels, talking about the supply and demand, and then you can kind of get a brief understanding of what industries and sectors are actually expanding on, and what ones are contracting. Talking about inventory levels, talking about their labor, so you can kind of get a gist of employment as well. So it's just telling you, what they're actually like what has happened and what they're forecasting for the next month, for the next few months, and so forth. Anyway, so let's move on. So we're going to quickly look at the charts, taking all my key levels off. So I'm going to quickly have a look, on the 4 hour. So essentially, like, we've just been on this bit of a risk-off sentiment, especially with the Feds hiking, potentially hiking interest rates as soon as 2024, and potentially if inflation stays consistent at 2%, starts to contract a bit, because it's at like 5% at the moment on a year-on-year basis. So if it starts to contract a bit, that'll be consistent with the Fed's goals, right? So that's why we've essentially been seeing the Australian dollar just to fall, just depreciating, just with that hawkish sentiment from the Federal Reserve. Obviously, that's not too great with the Australian dollar, because the US dollar seems a lot more attractive, but getting rid of the fundamentals. So we can definitely see, after we're in this like high time frame range, these highs here, these lows here. Once we break below, we did a nice retest below here, so to come down. Now we're on this bearish structure structure, right? So we actually did retest on the 4 hour. We actually did retest below here, right? What I'm really liking, because I'm expecting us, like, however we move at the week, I'm expecting for us to come up above this range, right? If anything, if we can identify a continued risk-off sentiment, we can potentially take some high-risk sells. Can continue this play, high-risk sells at 74,950, right? 74,950, at these, or even 900 at these candle bodies, right? And if we can do that, we can take some high-risk sells, right? Take some high-risk sells here and move to the downside, right? We can take some safer sells once we actually retest below here. If we can get a nice retest here, this previous little range, these nice candle bodies here, take some take some safer sells here. If not, you can wait for a nice candle body, nice high time frame candle body support, some nice 1 hour, 4 hour closures, and we can take some very high risk buys up. But in order for that, I would probably want to see Dixie just a fade from here, right? But we must keep in mind that with Dixie, we are getting very close to a 93,400 high time frame key level. We'll talk about that very soon, okay? So essentially what am I looking at? Australian dollar. Obviously we're going to get some volatility with the monetary policy meeting minutes, so that's going to create some volatility, but more than likely they're just going to retain to their script, okay? Unless they talk about tapering their bond buying program, that's probably going to increase the Australian dollar. So yeah, like what I'm really liking, take some high risk sells here. Yeah, take some high risk sells here, but if we actually break and retest above here, we could continue up to the upside, but I probably want to see Dixie start to appreciate a lot more. But yeah, once we actually start to break below here, get some nice high time frame candle body closures, we will continue to the downside, okay? We will 100% continue to the downside. And we can, you really can't deny this high time frame bearish structure, or high time frame corrective structure. We've got these lows here, highs here, lows here, highs here, lows here, and these lows are actually getting, or these highs are actually getting smaller and smaller and smaller. So it's really indicating that obviously the bears are in control. But yeah, it's just, waiting for the candle body close. The moment, I'm just following with our current trend at the moment. So yeah, I'm really inclined just to take some further sells to the downside with Dixie appreciation. But if Dixie starts to fade and doesn't, if Dixie doesn't break and retest above here, I'm more than likely gonna go start going long on the Aussie and our other risk currencies. So that's essentially what I'm looking at. Let me look at our high time frame key levels. So right on the dot. I'm really liking if we can probably even retest above 74.4, get some nice candle body closures above there. That would, and then we can engulf this previous 4 hour candle, come up above here, recognize some buying pressure, and we'd be playing this little range here. Okay, so yeah, that's another idea. So euro's the same thing, euro dollar, same thing, bearish corrective structure channel here, right? We can definitely identify that. Probably high risk buys here, right? Very, very, very high risk buys here. I'd probably want to see, I'd really, really want to see us to get some nice candle body retest above here. If we do get some nice candle body retest, that will be very safe for some very high risk buys. However, if we retest below here, we are going to continue to the downside. But the thing is, we might see a bit of indecision prior to the interest rate decision by the ECB, so we're going to be very cautious about that. But essentially what I'm looking at right now, get a sudden change in the sentiment, start to veer onto a risk on sentiment, which is pretty hard after this bearish push, after this strong bearish push. It's kind of hard. I don't really want to be, I don't really want to say I don't really want to, try and change the sentiment that we currently have at the moment. But yeah, what I'm really liking, we can retain here, we can still play the impulsive moves, because we can definitely see that the bearish moves are a lot more impulsive than the bullish moves. So what's that indicating? That's indicating that sellers are in control, right? We got this bullish push to the upside, failed to come above here, then we get this strong bearish engulfing candle. So yeah, high risk buys here, very high risk. But if we can break and retest, get some nice candle body closure below here, we can take the sellers down, right? But if we can break and retest above 118,780, which is essentially 80 pips away, yeah, get some nice candle body retest, start to play at the bottom of this range here, and at these previous range highs here. We got this range low, essentially this range low right here, these wick to these candle bodies, to these candle bodies, to these wick highs, wick highs, wick highs here. Yeah, that's going to make a lot of sense. If we retest above here, we can continue to the upside, and yeah, we can definitely play some risk on sentiment, depending on what the ECB says, because we did have a bit of a sell-off on Friday to end the week. Yeah, we did have a bit of a sell-off. So GU, it was very mixed on Friday. What am I looking at? So I'm really liking how we did close at these candle body at these candle body lows. It's ranging at the moment. We cannot deny this bearish corrective structure. Cannot deny that at the moment. Obviously Dixie appreciating, so like I said, Dixie is at a make or break level, right? If we get some strong rejections here, some very strong rejections, changing the sentiment, we can definitely start to go long on our risk currencies. But I prefer to wait, right? We might, for your safer buys, yeah, if we break and retest above 139, but that's 150 pips away, okay, or 130 pips away. So right now, can definitely take some very high risk buys here, but you would need a strong candle body support. I wouldn't be surprised if we actually dip down to these weekly lows here, or these monthly lows right here, okay, which is about, it's literally only 30 pips away, okay. So but once we actually break below here, we're going down, we're 100% going down. If we get some nice 1 hour closures below these 530, which is only 10 pips away, 100%. It's when you look at the charts, combine this with Dixie, we're at these lows right now, and Dixie are at these highs, literally. So it's a make or break point. Once this move to the downside happens, it's going to be strong. Same with euro. Once we come below here, it's going to pull way to the downside. Let me remove these. Australian dollar, it's kind of indicating that we're going to push further to the downside, right? So, you know, sales are very strong with our risk currencies, but we got to admit, you know, we're at these highs with Dixie. Like, we're at these monthly highs at the moment, so you'll be very cautious about that. Okay, very cautious. So we're at like our make or break point to start the week. Anyway, so let's go to GJ. Sorry, GJ cannot deny this bearish character structure. We coming to the coming further to the downside, and we cannot deny how we actually retested this little high time frame order block here. We've got these nice candle body closures here. We actually did get a nice, we didn't really get a retest on the last 4-hour candle. We are coming further to the downside, right? And essentially where we close are at these candle bodies, right? We actually, so we did close at these candle bodies. So what am I really looking at? So GJ, like I said, you know, we're on a bit of a risk off sentiment at the moment. Obviously, it depends with what my macro data is coming out this week, but we don't really have too much impactful data coming out this week. You know, when I'm going, all right, you only have retail sales, like that's your biggest thing this week. ECB, like you've got interest rates in euro, US. Obviously, you got. Obviously, if this is strong, then that's going to probably bring Dixie a bit down, because Dixie acts as a safe haven. What else? We can definitely. If Pmi data is like still strong, we can definitely take some shorts on Dixie, and you know, get a short-term change in the sentiment. Okay, so what I'm, you know, we're at this key level right now. Okay, obviously safer sells below 150, 150.900, 150.900. However, like, you cannot deny this bearish character structure. So however, if we can potentially go back into this little range here, break and retest above this little range here at 152.520, which is essentially 100 pips away, we can definitely potentially take the buys up, you know. But we need to see probably, you probably need to see Dixie just to fall off, right? Like, you would 100% need to see Dixie to fall off. But why am I saying that when talking about the yen? Because the yen, Dixie, and the Swiss franc, they all act the same. You know, if you pull up Aussie yen, if you pull up GJ, pound dollar, it's pretty damn similar if you ask me. Very similar. And if I were to pull up pound against the Swiss, like, it's very similar. Anyway, so that's just what I'm seeing at the moment. Obviously, if we do get a change in the sentiment, we can definitely take some high risk buys. But once we break below here, we are going to come down, and then we can definitely see Dixie start to appreciate. Okay. So moving on, USD Cad. So we're at that. So we're at this high right now. Okay. 24th of April, right? Now let's go on Dixie, right? When we come up here, 31st of March. Okay. Where did we go on the 31st of March? Ooh. Sorry, 31st of March. Where did we go? Yeah, we were at these highs here, right? Oh, sorry. These highs here, right? These highs here, okay? And we did match these highs, okay? Then I'm pretty sure that was just a Bank of Canada interest rate decision. I'm 100% sure it was. Anyway, so what can we indicate right now? Okay, so USD Cad, where are we right now? We're pretty damn close to that level. And Dixie, what were we doing? We're pretty damn close to that level. So what I was just telling you, like, alright, you know, we are at a make or break point with USD Cad. Like, you're just going to match up these dates and match up historical repetition. Okay, so we're in a make or break level, right? If we fail, if we 110% fail to stay above, like, I'm just saying here, stay above 126.370, that is a key level of interest, right? I probably want to have a look at oil to see what it's doing. If oil starts to appreciate, even more, you know, if there's a bit more tension, it's about the production levels, 100%, yeah, CAD's probably going to increase, right? if they don't increase their production levels 100%. Yeah. So what am I looking at? What am I looking at right now? So when I'm looking at USD Cad, right, we're at this like level of interest like right now. Hold on, let me fix this up. Let me go. Yeah, at these candle bodies. Okay, we might come up here to these highs here. Oh hell, we might even come up here, right? That's a possibility, but listen. So we can definitely, yeah, like definitely that'll be key level right there. If we can retest above here, and then we're going to continue up, then we'd probably want to wait for Dixie to come up to this level here, and then it'll be like a make or break point. Okay, so that's what I'm looking on USD Cad. So what am I looking at? All right, so we did a nice, like a lovely retest here. Okay, nice retest here. If we break and retest above there, we're going to continue up, or we can take some high risk sells once we actually reach this little key level of interest, right? And once we actually, and if we were to take the high risk sells, we could continue our sentiment or our trade idea, like expand our trade idea into an intraday trade idea, and most likely once we break below this, which is about 50 pips away, we could 100% take the sales down, take it to these previous lows here, but you would need to see Dixie just to fade. Like, we can definitely recognize this. We might get an aggressive double top on a higher time frame, but we 100% also could just see, you know, us just retrace like 90% right now and not get that double top, possibly. So yeah, that's what I'm looking on USD Cad. Okay. Obviously, break and retest above here. Could take the buys up. Dixie needs to break above that zone, or take some high risk sells here. The key level of interest, and we could extend the trade idea if we continue further to the downside. Once we break and retest below 670. Okay. Gold. All right. So gold. All right. So gold. After breaking above this little high time frame order block, we got these lows here, 1794. You got these highs here, 1814. Once we broke above 1814, Dixie started to fade. Took the buys on gold. Which in mind, yeah. I want to see if it actually did match out. Fortunately, no, it didn't. We actually, like, I was really expecting us to probably come to 1844 at least, but we didn't. We actually did push further to the downside. But now, right, you know, we actually did come below and actually close below the previous order block high. So what's that indicating? Like, that's obviously indicating a lot more selling pressure, right? If we fail to retest above 1814 with some nice candle body closures, we are more than 100% coming further to the downside, right? I probably want to see a bit of a range here. You get some nice 1 hour and 4 hour body closures. This level here, break and retest below here, indicating, you know, more selling pressure on gold. And what's that going to tell me? It's obviously going to tell me to go short on gold, but I know at the moment we're at this little key level of interest. Okay, so that's one thing to be mindful about. Okay, so break and retest below here at these candle bodies, break and retest 1814, break and retest there, continue further to the downside, get some nice candle body closures below there, and then we can probably extend the trades to 1797. So, you know, that's a 1797, 1804, you know, it's like 150 pip range, 170 pip range, yeah, 170 pip range, right? Or we could see gold come back above to 1821, which is 100 pips, get some high risk shorts in there, get some high risk shorts in there and take the sales down, but I'm not really expecting that to happen. Just with prices at the moment, if we can break and retest below 1814, we can take some sales to the downside, because we're currently at 1811, 1812 at this point in time. Dixie, I'll pretty much just explain what I'm looking at for Dixie. We're at a make or break point, break and retest above here, we're going to continue way to the upside. Yeah, way to the upside. It really depends, like, if there's obviously more talks about tapering the bond buying, that's probably going to more than likely increase the dollar. and we can see the dollar continue up, or if we see a lot more fear in the market, see a lot more COVID variants, and hell, if we see the yields have to decrease a lot more, it's like the 10 years like at 1.3 at the moment, if we see it to come down a bit further, which is kind of indicating, I guess, a lot of negativity throughout the world, because your yields only appreciate, this is talking about something else, so your yields only appreciate in times of optimism, okay? You know, they were at like 1.7 a couple of months back. Now they're down to 1.3 or 1.2 ish. So that's obviously not great for the economy. Why is that? Because you got to think about bonds and yields. They work inversely. So if more people buy bonds, obviously that's high in demand. Obviously the yield's going to go down. Obviously if less people are buying bonds, the yields are going to go up. So yeah, that's essentially the bond market in a nutshell, and it's just really a supply and demand thing. So moving on, so yeah, we're at our make a break point on Dixie. Okay, so let's just keep that in mind. Probably go into the Dixie chart every single time I've looked at all my other charts, but yeah, we all understand that. Okay, now looking at the Dow. So looking at the Dow, we are failing to break that key level. We're failing to get some nice candle body closures at 35,100. We are being pushing further to the downside. I don't really want to sell it. I refuse to sell the Dow. I don't want to. I don't really want to. If anything, we did get. If anything, we can. Yeah, that could definitely take some high risk buys here, but I'm not too inclined for that. I probably want to wait for some nice candle body closures. Wouldn't be surprised if we actually dip further here to the downside. These previous order block lows, and we could do a bit of a triple bottom here, some aggressive buys if we get to this level. And yeah, you could probably put your stops just below these wicks here. Because you got to realize when we push to the upside, we did generate a bit of a consolidation or accumulation area before we did push to the upside. And essentially, yeah, it's essentially here. You know, we did accumulate, did generate a bit of a nice support here before pushing to the upside. So you could take some high risk buys there. Obviously, your safer buys if we can actually break and retest above there. But yeah, you could be very mindful if we do continue to the downside. Obviously, well, I'm going to continue to the downside if Dixie starts to fly. More likely the Dow is going to continue to drop. So keep that in mind. They're my trade ideas. Hopefully you guys learned something. Hopefully you enjoyed the video. If you did, please like, share and subscribe. Anyways, I'll talk to you next time.